Hi, I'm Louise. Axiata, one of Malaysia's largest telco counters. Is it worthy to be invested? Profit and dividend distribution. Between financial year 2012 to 2021, Axiata's revenue has been on an upward trend. On the other hand, its profit before tax and profit after tax were decreasing gradually. In particular, in 2018, the company experienced severe losses. Likewise, it is shown in this figure that between financial year 2012 to 2021, Axiata's earning per share had also been on a downward trend. During this period, dividend distribution was consistent. However, in the last few years, the amount of dividend distributed was lesser than before. Between financial year 2012 to 2021, Axiata's dividend yield was on a downward trend. In financial year 2021, Axiata's dividend yield was 2.2%, which was only slightly higher than FD rates. Between financial year 2012 to 2021, Axiata's annual dividend payout ratio ranged between 60 to 100%. In some years, the company distributed special dividends, which led to dividend payout ratios that were higher than 100%. In financial year 2018, although Axiata was losing money, it still distributed dividend, hence the payout ratio was a negative value. Management efficiency. Between financial year 2012 to 2021, Axiata's net profit margin was decreasing over time, staying at around 5% in the last few years, which is relatively low. In 2018, the company was losing money, so the net profit margin was a negative value. As the company's profits were decreasing over the years, between financial year 2012 to 2021, both of Axiata's return on assets and return on equity were on a downward trend. Stock valuation. Between financial year 2012 to 2021, net tangible assets per share of Axiata was almost constant at around RM2 ringgit. On the other hand, during this time period, Axiata's share price was decreasing. It appears that Axiata's share price is not directly linked to the assets value of the company. By comparing its share price and earnings trend, it is shown that there are some correlation between its earnings and share price. Between financial year 2012 to 2021, it is shown that Axiata's earnings were decreasing over time. Likewise, its share price was also decreasing with time. This shows that the share price is influenced by the company's earnings to some extent. Price to book ratio is calculated by dividing share price with net tangible assets per share. Lower price to book ratio, especially lower than 1, is preferable. This shows that the share price is undervalued and has room for upward movement and worthy to be invested. Recently, Axiata's price to book ratio has been on a downward trend, indicating that its share price is becoming cheaper over time. Although now that the share price appears to be cheaper, the price to book ratio is at around 2 times, which shows that the share price is still at a relatively high point. PE ratio is calculated by dividing share price with earning per share, which shows the ratio between the share price and the earnings of the company. If the ratio is very high, it shows that the share price is at a high point, which is not worthy to be invested. Between financial year 2012 to 2021, the PE ratio of Axiata was fluctuating. This was caused by decreased earnings and losses in some years. In 2021, Axiata's PE ratio was at around 30 times, indicating that the share price is still relatively high. The market cap is calculated by multiplying share price with the number of shares. Hence, higher share price will contribute to increasing market cap and overall valuation of the company. In the last few years, Axiata's market cap has been on a downward trend, indicating that investors are having a lower valuation on the stock. By considering the number of shareholders holding the stock, it is shown that between 2012 to 2019, the number of Axiata's shareholders was almost constant. On the other hand, in 2020 and 2021, the number of shareholders were increasing, which might be due to lowering share prices that attracted more interest from investors. Axiata is also well supported by institutional investors. Its largest shareholder is Khazanah Nasional Berhad, holding 36.44% of total shares, followed by EPF, Amanah Saham Bumi Putra, and so on, also holding significant quantities of shares. Due to its large market cap and stability, Axiata also attracted significant interest from foreign investors. In 2021, foreign investors were holding as much as 10.92% of Axiata's total shares. Financial management and stability. Between financial year 2012 to 2021, it is shown that Axiata's capital expenditure spending is on an upward trend, indicating that the company has been investing significantly in property, plants, and equipment in order to expand its capacity and reach more customers. Between financial year 2012 to 2021, it is shown that Axiata's equity was almost constant, while its debt level has been increasing over time. In the last few years, its equity to liability ratio was around 1, indicating that its debt is maintained at a reasonable level. Between financial year 2012 to 2021, it is shown that both of Axiata's current asset and current liability has been on an upward trend. In the last few years, its current ratio was below 1, indicating that the company's short-term debt level was relatively high. This could be a risk factor that might be detrimental to the company's financial stability. Between financial year 2012 to 2021, Axiata's cash flow was between RM3 to 8 billion, a very high amount, indicating that the company's finance is on a stable footing. By considering its cash flow per share, it is shown that in financial year 2021, Axiata's cash flow per share was RM69 which is around 18% of the current share price. In conclusion, in the last few years, the market competition between telecommunication services providers has been intense, which led to the decreasing profits of Axiata. In addition, its dividend yield has also been decreasing in the last few years, down to around 2%. However, Axiata's market cap is large and its finances stable. Now its PE ratio is about 36 times. Do you think it is worthy to be invested in? Also worth mentioning is that Axiata is a multinational company with business activities in Malaysia, Indonesia, Sri Lanka, Bangladesh, Cambodia, and Nepal, serving 163.1 million mobile customers and 185,000 business customers. Axiata is also involved in the e-wallet business under the Boost brand, with up to 9.7 million Boost Live e-wallet users and 439,000 Boost Biz merchants in Malaysia. Axiata also owns and manages over 44,000 signal towers, providing seamless connectivity to its customers. Figure shows that Axiata's main revenue source is from Indonesia's XL Axiata subsidiary, followed by Malaysia's Celcom, Bangladesh's Robi, Sri Lanka's Dialog, and other subsidiaries. That's all for today. Feel free to share your comments in the comment section. See you next time. Bye. The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis as well as follow up latest update information before making any investment decisions.